So let's get rolling this morning. So the election is now over. Obviously, you guys have been watching it. We had a very big, some of you guys were in the room last night. We had a parabolic move to the upside when the election was going on. I'll go over that a little bit. I want to go over the liquidity grab trader and what we're looking for here this morning on some of these setups. I want to go over the roadmap real quick. If we break outside of a high value area, if we break outside a high value at this level, the market is in a new territory. So we're in a new territory. We went parabolic last night. As you can see, we broke out of our value area that I posted yesterday. It retested it, and the market just went parabolic, climax buying all night. NASDAQ got marked up. The S&P got marked up. The YM got marked up. And then they shorted the euro and the pound all during the election. So we had some really good setups if you guys are watching your system last night. But let's look at today. We're forming a big cup and handle today. You can see this big cup. There's your handle. We're in a new territory. We're in a new territory high. So watch for a breakout. If we break out above 52.5, this is high value area. This is all the market participants. This is a brick wall right here. We have a brick wall, meaning we have 3 of our top market profiles, our 2 to 4 hour profiles that are stacked. If we break into new territory, you're probably going to see a nice little move again to the upside based upon all these buy stops that are going to get hit, from all these stops that are just above these swings, because we did break out into new territory yesterday into the S&P. And so if we do get above HVA, heads up on that. If we break back inside of LVA, we have a big gap to fill. I want you guys to be aware of this. We love trading gaps. We're very accurate. We've been dead on our gaps with this market profile. And there it is. We have a big gap from looks like around 18 all the way down to 30, maybe around 38. So we have a huge 75 point gap to the downside if we get back below LVA. So both sides of the market is conducive to some nice trading. We do have some tomorrow. The Fed funds is being released, the rate. So remember, go to Forex Factory. It's free. Get your news event. The reason you want to go here at forexfactory.com, we are releasing the liquidity grab trader. I'm getting on Gerald's computer today to make sure we're all ready to go. He's going to wrap that. We're going to put that on the members download page. You guys are going to like the strategy because it's a liquidity grab trader. We're going to go over when it likes to take trades. And we're going to put that on the members download page. So, but go to Forex Factory. You don't want to turn the liquidity grab trader going into news. Wednesday, November 6th. We have no news today. Remember, go over to the funnel, or it looks like a little tornado. I only like to look at red expected impact numbers. This is a free website you can use against the USD. Now, I do like to trade the euro and the pound, so I'll look at these, the pound and the euro also. But if you don't trade the euro and the pound like I do, you can go to just a USD right there against the USD. So any news on the euro, any US news, that will let you know. So when you apply the filter like that, it's going to spit out this news for you for the entire week. What you don't want to do when you're trading the liquidity grab trader, okay, so when you're trading it, we're going to go over the liquidity grab trader today. This I have running on my other Ninja trader. There you go, Gerald. So I got this running on my other Ninja right now through the liquidity grab trader. We're going to go over that here this morning. This will be released on the members download page. Like I said, I'm running it on all these different markets. You can run it on any futures, any stock, any currency, any Forex. It pretty much works around the board The beautiful thing about this liquidity grab trader that we're releasing is that it's can work on multiple Renko sizes. Because you want to try to grab liquidity. You want to try to get into the trades that where the market's trying to get these buy order blocks or sell order blocks on these retracements where the counter trend traders get knocked out. So that's a beauty of the system. And like I said, I'm going to show you multiple different markets. We're actually going to do a replay on that this Friday. This Friday I'll be doing a replay on multiple markets because let's see, when is the Fed? The Fed comes out tomorrow. So Friday we don't have any news events. So log in at 8 o'clock on Friday. I'm going to run a replay on this because we're ready to release this thing. As soon as Gerald gets this wrapped up, I'm doing some final touches with him on getting control and making sure of the computer, making sure we got the same settings before we put this and wrap it up for you. So, but you can use it on all markets. Like I said, my top markets that I like to look at that I'm currently running on the other Ninja that I use. I love the pound. I love the euro against it. The DAX, S&P, Dow. The minis off of it or the big contracts, up to you. S&P, crude, NASDAQ futures. It's universal on all markets. Now, if you want to look at liquidity grab trading on other markets like crypto, it works on crypto. Bitcoin, it works on pretty much any tradable instrument. It's looking for the same thing. It's looking for when there's buy or sell order blocks on a retracement. And then it looks to take advantage of that. So when you see these big jump, in price against overall trend like this is where the smart money is grabbing liquidity. They're trying to sell order blocks this morning on gold. They retraced the market. Gold's in a seller market right now. They're marking the market down. Smart money grab liquidity on the pullback. They take all these shorter term traders out of the market that like to counter trend trade the market, whether they're using tick charts, minute charts, Renko bars, whether they're using moving average crossovers, pivot levels, Fibonacci levels, all these shorter term traders that are going against the overall trend on gold just got taken out of the market. So that's what the liquidity grab trader does. It tries to find where the smart money is trying to get positioned in the market. Right now, the smart money is shorting gold. They are net short gold. You can see what they're doing. They're tanking the market right now. They're tanking the market because they pulled it back twice on a liquidity grab. And I'm going to go over these exact Renko sizes. These are not the Renko sizes I use in the room. I do have specific Renko sizes that I'm going to send with you guys on a PDF when this thing's released. I really, really like them because you don't get a lot of liquidity grabs on them during the day, but when you do, it's real neat how they work out. So I'm going to be sending those out to all you, all you members. I won't be doing on videos because I don't want to give these settings out to just everybody. Only members that have Liquidity Grab Trader will receive these Renko settings. As you can tell, it's really, really smooth Renko size. And the stops, I have a maximum stop on this gold actually of 35 ticks. On this one, you don't need extremely large stops on this Renko size that I use, that I look at, that we'll be sending out to you. We will put that down standard in the room for you. On the members download page. So the reason I say look at forexfactory.com because you don't want to trade against if Fed fund rates are coming out tomorrow. Get this out of the way. Unemployment claims tomorrow at 8:30. You'll want to turn the liquidity grab trader on 3 minutes after the news posts and stop at 3 minutes before the news posts. 3 minutes before, you don't want to run a auto trader or a trader through the news event, right? Because it's too erratic, right? So what you want to do is you want to turn it off 3 minutes before news. You can turn it on 3 minutes after news, and then you can you can let it trade that way. So tomorrow, the Fed funds rate, you'd want to turn it off at 157, and you can turn it back on at 203. Some of you guys will wait 5 minutes after news. It settles down even more. But the rule of thumb is 3 to 5 minutes before after news. I would not run this thing. Now, what I am showing you is a little bit longer Renko sizes. It smooths price action out. It's had a beautiful overnight on the S&P, beautiful overnight on the YM. Pretty much all the markets have been really doing well this morning. The pound's been tanking. The euro's been tanking. Really good trades on that so far this morning off of it. So we will show you how to use that and how to use these Renko sizes as far as for that. So just make sure that we're used to putting up the Forex Factory and so on when we dig into that. So this Friday, 8 a.m., I'm going to go over the replay on it, and we'll get you guys on the same page on how to use it. If you look at this morning's action, then let's take a look at today's action on the S&P as we get ready for today. Like I said, if you look, we have a beautiful looking chart. If we break out of 52, we are in a new high territory on the S&P. We went parabolic last night. I want to show you these parabolic trades that you could take advantage of on your own system. And for those that lease the system, this is a move breakout of my level I put up yesterday morning. 58.38 is a huge level. It broke, retested it, went right to our next level. So if we break back inside of LVA today, we got a big gap, huge gap to fill on the downside. 38 would be the target, and right around 18 or so. So would be the the breakdown. So heads up that on market profile. If we break out, let's watch for that. Let's look where these liquidity grabs come up and how the strategy is how you want to look at getting into these markets. So if we go back to when the election was going on last night, we went parabolic. It started right after 8 a.m. So here's what you want to do. So we have a dual trend filter. We have a green zone and we have a red zone. And then inside that, we got our Renko bar type that we created. And that creates a dual trend if they're green, green, or red, red. So when they first turned red, green, that means the market's trying to transition to the other side. So if it was a red zone and then the dual trend filter does not agree, it's green, red here, that means we're going to look for a failure trade. So that started the big move on the S&P, our failure trade at 58.48 before it went parabolic. What you want to do is after the failure trade, you have Momo 1, Momo 2. If you see a Momo 3 comes out, this is where the parabolic climax buying started. When this trigger fired, that's where it started last night in the election. As elections going on, the S&P, the NASDAQ, the YM, they all look the same. It came up. Now we're in a hard trend. You want to look for the first retracement. That's your V bottom that came in. We have a specific setup. The trigger fired on the V bottom. Momo 1, Momo 2. This is the best candle you're going to get in our trade room. This is a V bottom zero turn candle. What that means is a yellow trigger fired on the first hammer reversal. You're allowed to let it fire within 3 candles after the hammer. 1, 2, 3. It fired on the second one there. This actually fired last night as a hammer reversal. That's the best entry you can get. It tells you they're trying to mark the market up in the markup phase. And then if you notice Momo 1, Momo 2, another beautiful candle. You can see when they try to mark the market up hard. There's my best setup you're going to get on a V bottom because that's above structure, my structure dots, and it's a yellow candle trigger on a hammer. They had 2 back-to-back, so you can see they're going parabolic. If you see this happen, you want to try to get into the market because they're trying to really mark the market up. Because you look at it, within 1 hour, they were just screaming this market up. They're taking all the counters out of the market because we're in new high territory. 58.51, They brought it all the way up to 58.94, almost 40 points on the S&P within an hour period, because they were cranking it to the upside, taking all those stops out that had it above the high on the S&P. But that's how we like to do it. We like to look at getting into the failure, Momo 1, 1, 2, Momo 3. What that does, Momo 3, it tells you we look to go parabolic. And there's your V bottom. There's Momo 1. There's your V bottom. There's Momo 1, Momo 2. There's your V bottom. There's Momo 1. There's your V bottom, Momo 1, Momo 1, 2, 3. So you can see that that's the neat thing about the system. It caught that whole up move. It caught that whole up move. Gold's had another trade. Right here's a liquidity grab trade. Let me show you. You guys are going to love this Renko size I'm going to show you when we get this on the members download page. Because what it does, it filters out a lot of the liquidity grabs, and it filters out a lot of liquidity grabs, and you're going to really enjoy, you members. I'm just not going to give it out to the public. It's going to be for you, for you guys that lease the system and with the PDF. So we'll make sure you guys get that. As you can tell, we have three big giant liquidity grabs since 8:14. It's 8:39. Gold is southbound on the Greyhound. The algorithm picked it up. Liquidity grab trader is catching the smart money, is pulling the market back, selling these order blocks just to bring the market lower. So if you look at just a few trades, because I just turned gold on a second ago before I logged into the room. I mean, this is the trades that's run so far this morning. It's a big contract. You can do the smaller contract too. Now, obviously, past performance is not indicative of future results, but you can see the power of this liquidity grab trader. This is just this morning. I just turned it on here right around 7:30. So the power is there with the strategy. You know, I want to show you how to use it on different markets, but what it tries to do is it tries to find the liquidity grabs where the market pulls back against the trend, and try to find those sell order blocks, and then it comes right back down, closes back down. Obviously, you can see the Renko size is very smooth, very smooth. So we'll go over that stuff Friday on a market replay for you. But my point is on this, on looking at, when we're looking at these markets, is that all you got to do is follow the dual trend filter. If it's green, you're a net buyer. So where this liquidity grab takes place is in between the V bottom and the Momo 1. So this is a V bottom. Let me show you where liquidity grabs take place. So this is a V bottom. This is the best V bottom you get in the trade room. The software picked it up, pattern recognition software. Pretty neat how this software will pick it up for us. Even on screaming markets, we're not trying to counter trend trade the market. We're trying to buy high, sell higher with order flow, with the smart money. We don't want to try to buy low, sell high. That's where the amateurs, you don't want to try to get caught selling high, trying to buy low. You're counter trend trading the market. So there's the V bottoms right there. Those are all the V bottoms. And now here's the Momo 1s right after the V bottoms. So the V bottoms will reset. The Momos will reset after another V bottom. So there's Momo 1 trigger. Momo 1 meaning there's momentum entries in the market you guys can trade. There's Momo 1. Oops. Now, where does liquidity grab occur? And we'll go over to some current trades running this morning, and we'll go over live trades. Where do we look for liquidity grab? So where do we look for these guys right here? When the market pulls back against, just on gold shorting this morning, gold's they've been taking it to the woodshed, getting all the counter trend traders wiped out of the market. Smart money's been bringing it down. See my smooth Renko size? They're drilling it. When they pull this back, where does these liquidity grabs like to take place? They like to take place between the V bottom and Momo 1. So what you're going to see is you're going to see liquidity grabs. You want to watch for liquidity grabs to happen in between here. Now, two ways you can use this liquidity grab trader. Now I let it run all through the election and all morning. I'm going to let it run all day today also. So with the smooth Renko size, you can do that where you can watch it and let it run. Or you can turn it on and let it manage the position for you, your entry, your stop, and your targets after a V bottom. So if you look where liquidity grab happens is in here. They're trying to pull the market back after a V bottom. They're trying to pull the market back after a V bottom. They're trying to pull the market back after a V bottom to gain momentum to get some for buy order blocks down here to pull it back against trend for continuation. Like gold, for instance. What are they trying to do right now? Look at this current green bar right now. Look at this green bar. It's a green bar that's forming right now. What are they trying to do? If this candle closes red, what did they just do? They just grab liquidity from all the counter trend traders again. The smart money is bringing it back. You've seen it was green. If this closes below the low here, they just grab liquidity again. The liquidity grab trader will pick that up. It will go short on the break of that low because it's noticing, it's recognizing that the market's grab liquidity again. Is taking all the novice traders out. The smart money, it's right with it. What it's doing, it's looking at this pullback in price, trying to grab liquidity. Now, if it doesn't close back down, the liquidity grab trader won't close. It won't go short. Why? Because it may be a trend change, right? So that's what the liquidity grab is. It's trying to grab liquidity on these pullbacks against price for a continuation, okay? So if we look at today's trading, let's go today since this morning. So right here, our dual trade funnel was red going into today at 7 a.m. We got the failure trade into Momo 1. Then we got a V bottom, then a Momo 1. So where would you look for a liquidity grab trade? You look for it at this level here. Then we come into failure, and then we get an outer edge trade because it turned red-green. It turned red-green, right? Failure into an outer edge, and now what are we looking for? We're looking for a possible failure or a what? Or a V bottom. So watch your yellow triggers. If it starts closing below it, we're going to get a yellow trigger that fires in a second. For a failure trade, if we get a failure trade, the target's going to be all the way down to control point at 59.22. So we're waiting to see if we get another close below and get a yellow trigger to fire for a possible failure setup. So you can see what they're trying to do when they pull back the market. You want to look for liquidity grab trades once you get a V bottom in the market with our software or you get a failure setup. You're looking for a V bottom or a failure setup. So you're looking for this pullback in price. You're looking for this pullback in price, and then you're looking for it to close back down for continuation. So you can do it two ways. Like here's a failure that I projected that's going to fire coming up. This is our failure trade. Our failure trade just means there's a transition in our trend filter. It turned that red dot that came against the green dot told us that we got a possible transition phase where the market's trying to roll back over. But you can look for two ways. The best time to look for liquidity grab is between a V bottom and V top when these yellow trigger bars fire, or a failure between a V bottom and Momo 1 or a failure in Momo 1. That's the best time to look for the overall trade. You can use it, Aaron. Yes, you can. Yep. The best time I like to use it, you're going against overall big trend right now. I like failures with trend. Like the trend, they've been liquidity, all the smart money's been liquidity grab trading, liquidity grab buying all night. You see this? All the way from, guys, they've been buying the market up since yesterday at 9:30. So 9:30, your best failure trades are going to be with this big long trend chart, guys. So when you see these big dips in price, and this is the advantage that we have over our trading opponents. See these big dips in price? We know that's where they're trying to do buy order blocks all the way up, buy order blocks. So the market, even though this is a big red bar that's ticking now, they've been trying to mark the market up every since 9:30 yesterday. So all your big buys will be what? To the upside, not to the downside, right? So all your buy setups are conducive to the big trend up. So when you see a failure, this is a failure with big trend here. That's a big trend. This is a V bottom with big trend. This is an outer edge with big trend. This is a failure against trend. This is a failure against big trend. You see the difference? You're going to get a punch. Like for instance, if you look at yesterday at when they marked the market up, they went parabolic. Or this morning, if you're an early morning trader at 1 a.m., this V bottom is with big trend. They went parabolic. There's your V bottom, Momo 1, Momo 2. We know at Momo 3, the market likes to go parabolics or climax buying. They like to take it through to the upside pretty hard. And then we get back into V bottom this morning at 2 a.m. in the morning. Momo 1, Momo 2, Momo 3 going parabolic again. They drill it to the upside. You see, because you're going with the dual trend filters, green, green. My point is you want to stick with the side on failure trades with the big trend. The punch is quite conducive to a winning trading plan because you are with the big trend of the market. You know, right now, this pullback, where our trend filter is turning red, red, it's against our big trend. They've been liquidity grab trading, buying order blocks, buy order blocks since 9:30 yesterday, no sells. The smart money has been buying dips all the way since yesterday at 9:30 a.m. So when you see these big dips in the market, and this is what the liquidity grab trader likes to do also, it likes to find these dips in the market where the smart money's buying order blocks. They'll wait till it closes back up and closes back green or red. That's what it did gold this morning. It recognized that gold was getting shorted, that these big liquidity grab sell blocks were taking place. They'd wait for a close below it, and it would get short the market. And that's what it's been doing this morning, and that's what it does on all markets. It catches where the smart money's pulling the market back, closing it back down, and we're looking for a continuation of that side.